I'm going to talk about how I understand market cycles, what makes sense to me. So I read Ray Dalio's Big Debt Crises back in 2020 when I was getting into the markets. If you don't know Ray Dalio, he's a great money manager, hedge fund manager. He's also an excellent communicator and philosopher of his ideas. But Big Debt Crises, it's like a series of textbooks that covers deleveragings, 2008, 2000, and I think it was 1929 too. Yeah. So it's true that the dollar inflates and depreciates over time. And when I say the dollar, I mean all fiat currencies. It is true. So it is true that gold is heading up into the right, and that Bitcoin is heading up into the right, and that stocks are heading up into the right. But while the money supply may expand in a relatively clean line, assets do not. They operate through booms and busts. And part of that is psychological, which we'll talk about, but the mechanism is through leverage. Okay? And this is why, for me, when I'm getting a grasp on are we going to be in a bear market or a bull market, the thing that I'm caring the most about is leverage. And is liquidity expanding or contracting? What is liquidity? Liquidity is a broader definition of the money supply. The money supply doesn't include leverage. And I'm going to talk about where we are in 2025, in my opinion. So, when we look at what happens when things are bad and people close their positions, people panic sold, people were stopped out of the market, people's had margin call and were forced to sell. Everybody's on the sidelines. This represents fear, and it also is a buying opportunity, because one of the main forces that forces asset prices lower is the mechanism of forced liquidations, which is only present when there's leverage in the system. So you can look at how much cash people are in, how much leverage people are in. Now over time, brave people start to buy the bottom, price starts to reverse, trend followers enter, the trend continues, new entrants come in, old entrants increase their leverage, the trend continues more, people take on more risk and more leverage. And part of this is a function of greed and euphoria and overconfidence, but also part of it is successful trading strategies. If you look at the most successful trading strategies, which are generally long-only trend following, it works to just keep increasing your leverage as things go higher and higher. At some point, things reverse and you give back your profit at the end. But you don't know how long that is, and you make money along the way. So as leverage increases though, and it pushes prices higher, and you see that you can where do you look for leverage? Well, for crypto you can look for perpetual futures open interest. It tells you how much leverage there is. There's hidden leverage, but that's a public reading of leverage. You can also look at stock market margin debt, which, by the way, in 2025, there's about $1 trillion of stock market margin debt, and there's about $50 billion of crypto open interest. So the stock market, there's 20 times the leverage in the stock. The stock market's a much bigger game than crypto. You can also find this data in Commitment of Traders report. Will tell you the positions of hedge funds and how long or short they are. So that'll also tell you leverage. So those are some of the main things I'm looking at. Now, when prices expanded and leverage is maximized and people are deployed, it becomes more difficult for price to go higher because there aren't as many new entrants. And the entrants that are in there are already levered up and don't have more available leverage. It also creates a risk where if price reverses, it's going to lead to that forced selling. So this is why there's booms and busts in markets. It's through the credit cycle. It's natural, and it always happens. It always happens. This time is not different. It always happens. Even in a hyperinflationary situation, the assets are not going to go straight up and to the right. They're going to go up and down to the right. Now, the psychological mechanism, which I shared on, is, you can look at the chart of psychology of a market cycle where you have hope and optimism and greed and euphoria and then complacency and fear. And you see these things, and you see it in the chatter. People don't really talk that much when they're afraid. They do other things, and nobody likes to post that they lost money and they got liquidated. These things are shared anonymously usually. People don't. But when people are up big, they share it to their Instagram story. They share it to their Facebook feed that the stock is up big, that they invested in. So tops are noisy. You see it on the billboards, you see it on the magazines, you see it at the Super Bowl ads, you see celebrities getting involved. Tops are very noisy, bottoms tend to be quiet. You'll see people posting the fear, people saying they're buying the dip, but a lot of the time at the true bottoms, people have just given up and they're focused on other things. Because again, people's attention is where their money is. So if everybody's invested, everybody's attention is on that thing. If nobody is invested, nobody's attention is really on it. You understand, I understand, when I'm in a position and I'm staring at the charts, it's because my money's there. And if my money's not there, I'm not really interested in looking at the charts. Does all this make sense? So I'm interested in looking at margin. I want to be an investor after a lot of margin has been wiped out, a lot of leverage has been wiped out. Buying the 2008 crash, buying the 2020 crash, buying the 2022 bear market shakeout, right? This is what I'm interested in doing. And it's painful and difficult, but when there's new all-time highs in leverage and everyone's talking about it and everyone's focused on it, it's better to not be pay it any mind at all and go do other things with your life. And when nobody's interested, that's when you go in and you focus on it. Do the reverse of everyone, right? Walk away, go the opposite direction of the crowd. Not to short these rallies, but in terms of your time and attention. When everyone else is interested, be cautious. If nobody's talking about it, maybe there's an opportunity there. Now this brings us to 2025. So I talked about, okay, there's near record levels in margin debt in the stock market. Crypto has been flushed out a lot already, but it went to wildly all-time highs in open interest. And commitment of traders report for gold has showed extreme positions on leverage in gold for a long time. Now, what we're also seeing, and you guys will see this a little bit later, people are wondering, I'm seeing in the markets, like now the stock market, all-time highs, breakouts have failed. We're not getting the follow through on rallies in crypto. They're selling off. Price action, prices failing in gaps. the system, built up over the past couple of years of optimism and greed and euphoria. And I mean, we're seeing real signs of a real liquidity contraction. What is that? The early estimates for, I think it comes out in March, or it measures up to March, but the early estimates for first quarter GDP is negative 1.5% annualized, which is a big whammy out of nowhere, big negative number. First negative number since 2022, first negative number, big number since 2020. Again, that's an estimate. We'll see what the real number is. But when GDP is contracting, we're talking about contractions in liquidity. That can't lead to higher asset prices. It doesn't lead to higher asset prices. It leads to lower asset prices, because when you have contractions in GDP, contractions in business, contractions in liquidity, it's going to lead to contractions in leverage and debt. So this is why, to me, I have an idea of the market cycle, and I only want to be in it because it takes energy and focus. Where your money's there, you're focused at the highest probability times. Could things go to new all-time highs from here? Absolutely, absolutely. They might, since between the time I record this and you see it, it's possible. But I want to get in after that deleveraging, which now I'm seeing a possible timeline. Okay, so let's talk about the timeline. In February, stock markets failed at all-time highs. Also in February, the crypto market crashed. But things are still at relatively high prices. Maybe not your favorite altcoin. But most things, gold still. Okay, if we get a negative GDP reading, now they might try to stimulate, so I'm going to talk about that a little bit. But the timeline is, first of all, summers are low liquidity, not a lot happens. They tend to be bearish. September is usually the bad month, right? Before October. So they say selling may go away. If you investigate seasonality, maybe the sample size is only 100 years or so, but there's for sure something there, and there's an explanation of why. People take the summers off, there's less liquidity. Less liquidity also means prices tend to go down. People allocate December, January. So I'm seeing maybe we get a rally in March, April, or May, like a really strong rally to trap people. Price starts to slide into the summer, and then there's some kind of a crash either in the summer or September, and price has bottomed or is bottoming by December, and 2026 is a bullish year. Now, this is just a guesstimate, it's not science. If this year is bullish, or if this year prices go up, GDP goes down, leverage increases, which is almost impossible, but if it does, then that would push timeline back to 2026 of being some sort of crash. And when I talk about crash, I'm not talking about price going to zero. I'm talking about what happened in July, August, of last year. I'm talking about what happened in 2022, 2020, COVID crash, 2008. I'm not talking about things going to zero or like a forever bear market, right? Things naturally appreciate versus the dollar over time, but it's a better risk reward bet when leverage is cleared out. So until then, I'm going to be waiting. Trade opportunistically here and there and let the bots trade for me, but that's my plan. Anyways, appreciate y'all, much love. Talk to y'all soon. Let me know what you think in the comments. And if you're interested in our trading systems, there's a link to that down below. Check them out, okay? Appreciate y'all. Peace.